Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is January the 10th already, 2019. Let's begin with the pre-market activity. Then we're going to segue into members' stock chart request, which is where I review the symbols that our gold members submit for me to review on video. And I have a bunch of them today, so let's get to it. The S&P 500 E-mini futures 4-hour chart. These will all be 4-hour charts on the pre-market dynamic charts. And we are down on the session, but we're off the lows of the session as well. And what I'd like to point out here is that we have an inverted head and shoulders setup forming. Left shoulder, head, right shoulder forming. This is a bullish setup. We have broken out above not one resistance level, but three resistance level. Resistance level number one here, then here, then the third being here, a big move higher. Actually, four resistance levels. So we have a continuation breakout setting up here. While we're down in the morning, I do not think that we're out as of yet. And overall, I do believe that this is a counter trend rally within the confines of a bear market. And you can see that we're beginning to nudge out of this downtrend channel on a very short-term basis. This bar just opened up, which is in green, only 9 minutes ago. So a lot can change between now and 9 a.m. Eastern Standard Time. The Nasdaq, very similar price action here. We were in a trading range. We broke out. Now we are pulling back this morning. We're down a little more than a half percentage point. We are off the lows of the session. So again, what we're doing here is we are setting up our resistance levels, because I do not believe yet that we have seen a top. I think we're close to a top on a daily basis, but on the 4-hour chart, I still think that we could rally back here and possibly put in a new daily high. Now, we are in a wedge formation. If we break down below this lower band of support here in red, we're coming down here to 6,400. If we break out above this upper band of resistance, we're coming up here to obviously yesterday's highs, but then after that, we could rally up to 67.38 on the Nasdaq. Let's take a look at the US dollar. Now, I've been cautioning about the US dollar for a while now. Jerome Powell's comments did nothing to help the US dollar. I've been saying that this has been a rounding top and that the problems all began back here when we broke out above resistance in green, then we failed and rolled over. We did it again here on the 14th of December. Failed, a breakout point failure or a bull trap, whatever you want to call it cupcakes, it doesn't matter. We broke back down below critical support, and ever since then, we have rallied, put in lower highs and lower lows. And finally, there was the support of the 95.65 level, and then we broke support. And here was our early warning trigger yesterday in orange, because we managed to rally, then we reversed, we saw some topping action, and then we stalled out. And I said, you know what? If we break down below this lower band of support here, we're coming all the way back down, and we may break this support level. That's exactly what happened. Now, we are rallying back off of yesterday's horrible price action, but I think that this rally will fail. So let's take a look at the dollar-sensitive plays. Gold. You may be looking at this chart here and saying, wow, gold is not really capitalizing on this rally, on this breakdown in the US dollar. And that's a fair observation. But what you need to appreciate is the fact that we have a lot of resistance above at 1,300 to 1,310 the ounce on gold. So what we're doing here is we are consolidating within this trading range, and we're looking for a breakout. Now, that does not mean that we cannot pull back and retest this lower band of support. With the dollar as weak as it is, I think that would be unusual to happen. It could happen, given the overhead supply that exists. So members will be watching gold, looking to put on a trade here. We're already long of the gold miners as well as silver, and we'll be looking to add to those positions. So gold looking very good. It is in the consolidation range. Let's jump over to silver. It too is in a trading range, not capitalizing much on the weaker US dollar. We attempted to break out a few times on this 4-hour chart, but we were rejected. There you have it. I think that ultimately we are going to break through to the upside here, and we will move higher. So we'll be looking to add to our silver trade in the coming days. Let's take a look at crude oil prices. We'll go with the Brent price. I booked profits in crude oil the other day. I'm kind of kicking myself for doing so. How do I look at oil right now? I think it's bullish. I think we are moving higher. We are breaking out of this bull flag setup. So it looks as though we are moving higher here on crude oil prices. Now in the forum, we've been hearing a lot about palladium. So let's take a look at that chart. So really pretty stuff going on here. Let's pull back a bit. Soak it all in, where we've been, where does it look like we're going. We're a bit overbought here. Let's drill down. All right, so it looks as though we have a bit of a wedge formation forming here. It's a continuation breakout pattern. It looks as though, in all probability, we are going to go higher on palladium. Now, if we break down below the 1260 level, expect a correction. But longer term, I mean, it's indisputable. We have a breakout on palladium. Let's take a quick look at a weekly chart. Now, on a weekly basis, I will point out that we are, relative to the third standard deviation Bollinger Band, overbought. Now, that doesn't mean it's going to collapse. It could trade sideways for a couple of weeks. So I don't see a rush to get involved immediately in palladium. But it's a nice chart, and in all probability, we are going higher here in the coming year. Let's segue over into members' stock chart requests, which is where we review the symbols that our members submit for me to review on video. First chart up, the S&P 500 weekly chart. So what immediately jumps out to me on this chart is the fact that we have resistance immediately above. Now, does that mean we can't break through it? Not at all, but it is Thursday. We do have 3 trading days in the books. We can measure how volume is this week. And volume's okay, not wonderful. So we might meet the weekly average. I think that we'll probably come in short of it. Does this inspire a lot of bullish price action from me? No. Why? It's because we're at resistance and volume is not wonderful. That means that there's a lack of institutional demand for the S&P 500. And it reinforces my belief that given the fairly light volume, that this is a counter-trend rally, and that in all probability in the coming week or weeks, we are going to roll over. Do we break down and put in lower lows? I don't know. I'm not that smart. But if we do fail to take out the lows of December, we'll be looking for a breakout, and we'll be looking to buy the S&P 500. If we fail to hold support levels and we begin to break down to lower lows, we'll build a short position. It's as simple as that. I'm not going to look at the charts and say, okay, this is my crystal ball of what's going to happen. I'm going to look at the chart and say, okay, what are the probabilities of what is going to happen? The markets will send us signals. They always do. Daily chart. Now, on a daily basis, the market's sending us signals. Take a look at this volume. This is horrible price action. So is this Goldman Sachs, is this JP Morgan Chase buying the S&P 500? No. This is mom and pop buying 100 shares. They have FOMO, fear of missing out. You have algos squeezing the shorts higher. This is not great price action. You had topping action here. Lots of volatility here on the 8th. Yesterday we sold off the highs of the day. Lots of volatility. And we are nearing resistance. We're right there. We bounced off of it yesterday at 258 on these spiders. And you can see the congestion back here. A lot of buyers back here who held. They held through the sell-off, and now they want their money back. I'm not loving the setup here. The next chart up, SLCA, weekly chart, a nice run here. The problem is that we are right at the upper band of the declining downtrend channel. Would I buy it here? No. Allow for the pullback. Volume this week, meh. It's not great. We may come in at about average, probably shy of it. Volume the prior 2 weeks, which were abbreviated, was not great. I do like Ultimate Oscillator. We are putting in higher lows and now higher highs. But that is not enough to buy at a resistance level. Honestly, it's at this point in time where you have a stock that's been in a downtrend for so long, I'd be looking to book profits into resistance, because the probability is that, given past history, that we will not close above this upper band of resistance. That doesn't mean we can't. That means that the probabilities, given the price action over the past 2 years, tells us that in all probability we are going to fail. Daily chart. Daily basis, nice bullish key reversal. I always talk about bullish key reversals. This is a textbook one. Beautiful. Then we have an outside reversal bar here on the second. Beautiful stuff. We've rallied. I think that we're probably going to go higher here, up and into $12.90 the share. The question is, do we break out or do we roll over? I think that if we close above the $13 per share mark, that'll put us above the upper band of resistance. As a matter of fact, I know it will. It'll put us above the upper band of resistance on the weekly chart, and that would give us the green light to begin accumulation. I would not go jumping in with my intended allotment of, let's say you want to buy 1,000 shares, I'll put 200, 250 on. Then I want to see whether or not we break out above the 1558 level. Then we have something to talk about where we can get a little bit more aggressive, because now we've gone from putting in lower highs and lower lows to putting in higher lows and higher highs. That's what you want to see were you to get long of the shares. And this is certainly not a short. Can Royalty Corp weekly chart. We broke out the week prior to last. Nice bullish key reversal. This week we have surged higher up and into resistance. We have topping action here, as you can see by this wick, shadow, topping tail, whatever you want to call it. Now, this resistance level has been formidable in the past. It was resistance back here in October 18. It was support in November 18. Support again later in November. So I would not buy these shares until we closed above $6.25 per share using a weekly chart. Volume rising sequentially is good stuff. Daily chart. So what we're seeing here on a daily basis at $6.14, we are seeing resistance. We have sellers moving in. The psychology is they bought here on this surge. They want their money back. I would not be a buyer until either A, we pulled back, retested $5.25 per share, or B, we closed above, let's call it $6.25 per share. So that's the rules-based approach that I would approach with ORHOF. Chesapeake Energy, weekly chart, a nice rally this week. Keep in mind, we have resistance above at $3 per share. Daily chart. So Chesapeake, daily chart looking good. RSI moving higher. Stokes moving higher. The problem here is that we are rallying up and into the 50-day moving average, which is beginning to flatten out some, and it's a natural resistance level. Now, yesterday we did close off the highs of the day. I'm not going to be the least bit surprised to see a pullback, a higher low, and then perhaps a continuation move higher. Volume yesterday was very good. But just keep in mind, we sold off the highs of the day. Let's take a look at a 15-minute chart. Let's see where that volume came from. Yeah, we had a big surge in the final half hour of trade in down volume. So just keep that in mind. Now, that being said, I like the 15-minute chart. Nice stabilization here. And absorption of yesterday's gains. Because yesterday morning we gapped up. Yes, we pulled back, but we rallied, put in a higher low, and we could quite possibly break out higher here. I'm not a big proponent of using 15-minute charts. It's more for day traders. It's far too volatile for me. But I think that looking at this chart, there's a good chance that we move higher. Will we proceed to new higher highs and break out above resistance? Not quite sure on a 15-minute chart. Far too volatile for me. The next chart up, Apple. Weekly chart. Now, last week, Apple guided down on revenues for Q1. This week, a bullish reversal bar. Is this for real? Will we close at the highs of the week? We don't know yet. 2 trading days left to go. Would I buy Apple here? Probably not. Why? It's because I'm worried about 2 levels. One is support right here, where we opened at 148.70 per share. 2, up here at 158.52. I would be a buyer of the shares were we able to close above 158.52 because that'll put us back above a support level. Right now, if I bought, I'd be hoping that we get through 158.52 by buying at 153.31, assuming that we don't gap up or gap down. That's not enough profit for me to want to put this type of trade on. I would want to see the market send me a signal and have the shares close above support. We're not there yet. I'm not ready. Let's go to a daily chart. On a daily basis, RSI has broken out. We pulled back, retested the breakout point, higher lows, and now higher highs. We have a breakout on Stokes as well. We pulled back, higher lows, no higher highs yet. And we have broken out on price. We pulled back off the highs of the day yesterday. What would be ideal for bulls right now is not necessarily a continuation move higher because you do have resistance above, but what would be ideal is a pullback and a retest of this at current, what should be a support level, which was a resistance level. That would be a good risk to reward entry point because you put your stop loss right below what should now be support. You get out with a small loss because if we fail to hold this breakout point and we drop back down into this trading range, we're coming back down here to 142 per share, and we could quite very well break, especially if it occurs this week. Volume yesterday was okay on Apple, but remember, we broke out. So volume relative to a breakout was not great. You'd like to see big up volume, enthusiasm, institutional demand. You didn't get that yesterday. You had a breakout on average volume. Nothing to get excited about. Wisdom Tree Currency Strategy Fund. All right, so we're going to go over a weekly chart here. And I didn't understand exactly what the CEW was, so I overlaid the US dollar in green over it because I had a hunch that it was a basket of currencies versus the US dollar. And that appears to be the case because they trade inversely of one another. And we have broken out. Actually, we did so last week on a weekly basis above resistance out of this triangle formation. It's well known I'm a dollar bear right now. We are positioned as such and doing quite well with our inverse trade of the US dollar. I like the setup here. I think that the dollar will continue to weaken and the CEW will continue to rise. Stokes looking outstanding. Higher lows. Daily chart. I think that this could be bought on a rally up and through 1848 the share. So the CEW is looking good. The Swiss franc, FXF, a lot of currencies today. We broke out this week on the Swiss franc. We have a bit of resistance, of which at current we are trading above at the 50-period moving average. But I see nothing but good things here for the Swiss franc. I think that we move higher from here. Daily chart, nice breakout yesterday. We are close to the third standard deviation Bollinger Band. So we're air quotes overbought relative to the third standard deviation Bollinger Band. We may trade sideways with a bias to the downside. But I think that we are going higher here. So if you're a long-term trader, it really doesn't matter much. We have a breakout on RSI, really pretty stuff. We had a lot of resistance at the neutral level for a while, and now we are putting in higher lows and higher highs. Stokes, same deal here, higher lows, higher highs. I think we're going higher on the Swiss franc. 5 below, weekly chart, we broke out this week. Would I buy right now? We'll check out the daily chart in a moment, but this is a pretty breakout. Volume rising. We may come in above average. 5 below daily chart. You could see that we broke out on the 8th above resistance, which was support back here. Yesterday, though, we were rejected. We failed to hold that breakout point. That is not good. So I would expect for us to get a pullback. Now, if we manage to close above 120 per share, I would be okay with buying it with a trade up to 125. Keep in mind that there is resistance up there. Where I would really get excited about buying these shares is a close above 125.75, because that sets us up for a new run up to prior highs. And once we get above those levels, it's all-time highs, clear blue skies. Quarterly chart, beautiful setup here. Once we get through resistance here, no prior buyers looking to get made whole, no resistance levels, and it's a straight shot higher. Until, of course, we get profit taking, creating new resistance levels. So 5 below is looking good longer term, but just keep in mind the daily resistance levels on the charts. Moving on to our final symbol, VMware weekly chart. Now, this is a nice breakout this week, a really nice chart. We have negated all the losses of 2018. This is a market leader showing true relative strength versus the Nasdaq and the S&P 500. Higher lows on Stokes. RSI, we have a breakout. The only negative I could say to watch out for is that we are leaning into the third standard deviation Bollinger Band on a weekly basis. That doesn't mean sell. It just means expect a pause and or a possible pullback here. Volume could be better. Otherwise, a nice breakout here. Daily chart. Let's see where we're going today. Really nice. We could press higher here. We closed just off the highs yesterday. Volume was okay. I think that we'll probably move higher on VMware. Now, keep in mind, though, if we press higher, again, we're leaning into the third standard deviation Bollinger Band. What's the play here? I don't know whether or not I would chase it were I a longer-term investor. I would rather wait for the inevitable pullback and a retest of support, ideally at the 146 level. And then I would look to open up my position. Then as we rallied up into new all-time highs, I would add more to that position, so on and so forth. This is a momentum trade, a rare one in this market environment. And that is it for today, folks. Everybody have a profitable trading day, and I'll talk to you soon. Be well.